Breakfast Club. My name's Darren Hancock, and this is ThetaWaveTrader. Analyzing the markets, kind of using four basic principles, or not basic, but four trade plans to trade any market. That's what the title of the show is. So that's my my method, four trade methods or four trade models. Trade any market, and I'll kind of explain them as we go through them today. So let me clear all these off. I was trying to go long here, waited for this high to get taken here, took a piece off, came back, moved my stop loss, and then closed it out right here at a break even. So I got a small profit, then break even. Then it changed it up right here. I got short, went for the low, and I actually held it, wanted it to go longer, so I just put my stop loss into a break even and a little bit of profit. So now I'm just watching to see if this thing changes direction here. We'll look for this because this will be a trade model 1. If it trades through here, comes back, closes inside this, we're looking for this first rejection block, old high, and then continuation on the upside. Let me get rid of all my set extension marks so they don't start confusing things. That's the bottom of the hour. That was the crazy Ivan. And so now we'll see this here. Let's get a body above here. It's not an inversion right now. It's just a regular fair value gap. Hasn't been broken through yet. Mind you, if you use just the small little box, then that's through it. So we'll wait here, see if it continues going lower. So we're through that. Looking for a short again here now. Now I don't want to see it break through here. That's when my stop loss is tight. I don't want to see any wicks through that. If it takes me, it takes me. It did. So now I'm going to wait for a cleaner market. So wait for this high to get taken here or this low. Otherwise, we're just going to chop back and forth inside a small consolidation here. This is a go, no go zone. Drop down to there. It'll be from open here or close here to open here. We'll wait to see if we can get a break above this old high, come back, retest this last up close candle and this here. That'll be a model 3. Hope you all had a good weekend. And yeah, let me make sure everybody's in here. Man, it's getting hot in here. Sweater this morning. We've broken that high there. I'm looking for this to continue going higher now. I want to see this get broken to the upside. We've got this no-go zone taken. So we can stick all the way back down into here or this box here. And then I want to see that continue going higher. If it doesn't, then we're looking for, again, you're in the middle of the chop. So it's not breaking out of here. We've just got a choppy consolidation setting up. Oh, that's just cleared out the high already. And move the stop loss to break even now that we've broken that high. This way, it's got to start getting some push here, right? We've broken this no-go zone, come back down and give it a little tap, and that's what you want to see, just reject off of there. You're aiming for your first high to get yourself to break even. It's went up, whipped right back, so you got to wait for it to get back up here again. Now I don't want to see this continuous popping back and forth, so I want to see this get out of here now. It's not doing it, so we'll wait for something cleaner. Watch this midpoint. Still got no body above here yet, so now I'm going to wait for this candle right here to get taken to the upside on a close. We're still in the no-go zone, so it's still, we're no-go for short. We want to go higher now. So you got one here, one here. These guys are overlapping. So this whole thing is like it's building strength here to go higher. Let's see if we're even on the show today. Okay, let's go. There you go. So we're slowly moving it higher. Still getting that control. So now you're going to make sure I'm not in it right now. So I just want to see if we get a trade now. If you're trading internal range liquidity, start using your take profit model 1. You're aiming for 50% of that market. Now that it's taken that high, you move your stop loss to break even, and you're looking for half your trade to get taken off right here and then start scaling out on the way up. So that's your take profit model 1. We're just trading internal range liquidity right now. So and there's 3 of us in here. So anyway, I appreciate you two guys in here, whoever's in here now. Thank you very much for turning up. So you're looking for 50% of that market now. I'm back. I'm home. I'm home for a short period of time. Then I'll still be doing it over the next few weeks. But mom's going in for surgery, so I'm going to be there with the fam, taking care of everybody, make sure they're all right. And but I'll still be doing my broadcasts in the morning, so I'll still see you guys in the morning. There's 50%, half your trade is off here now. You're break even, you're in a risk-free trade now. That's a take profit model 1. Oh, Randy, it was amazing. It was a great trip. The wife had an excellent 60th birthday. We've set up our wedding venue in a really nice place. I got all the family, sent out the invitations, food's arranged, entertainment's arranged. It's all good. It's all good. And we've got our Canada, the actual ceremony be done here in Canada, and we'll be having a grand old time here in Canada with all our Canadian friends and family. And then a few days later, we'll shoot off to England and celebrate with my family in England. So yeah, it's going to be a great time. A busy year. So now that we've broken this high, we haven't visited it yet. So this could still come back here, tag this, and still go higher. Now that we've taken out that 50%. I have a doctor appointment, so leaving in a couple of minutes. Saw you comment in Telegram, so wanted to say hi. Well, I hope the doctor's appointment goes well, Randy. I hope it's nothing serious. It's just a regular checkup. Hope you're doing awesome. Good luck with that. If it's something more serious, prayers are with you, man. We hope everything works out for you. Wow, 60. I just had my 68th birthday a couple of weeks ago. 68, Randy. That's what it's like when we get older, man. You remember back in the old days when you were 60, hey? Young pups. So if you hadn't taken your happy belated birthday, Randy. If you hadn't taken your 50% of your trade off right there for the internal range liquidity hunt, this could continue coming lower as well. So again, we break our no-go zone, then it tells me we're going lower. Otherwise, remember I said we can come back and tag there? You just tagged it right now. So now we can start getting this push higher. So I'm watching right here right now. I've got nothing in here showing me that it's reversing. So I want to see it tag this, and then you'll start to see it climb back up here. And you can come all the way down to the midpoint of that, which would be right about here at 417. So you got 1, 2, 3 points. And then no-go line is right there at 417. If we lose 417, we're coming all the way back down into this guy here. Sorry, it would be this mean threshold in here to this mean threshold, one of those two. So I want to see it leave from here. Not just to check up from the neck up or check up from the shoulders. But, oh, yeah. How'd that go? Is it feeling good? Is the shoulder feeling better? Then it's good to get a good surgeon, I tell you. I'm not crazy about all those student doctors. I know they need it. When I was a paramedic, I needed intubation, so I went to the OR and did tons of intubations. And you're going to tell people, "Hi, I'm new to this, and I could potentially break your teeth off if I do this wrong. But I'd like to practice on you if you wouldn't mind." And people were like, "Well, you be careful, man." It's like, "Okay, thank you, appreciate it." That's what we want. Now I want to see if we see how we got this little Sibby sitting right here, and we're just stopping in there. I just want to see it pop into here, give it another little kiss, run the high, and then continue pushing higher. Then I'm looking at this candle, this operative candle here at 850. Because if this now becomes a breaker, you cut above it, come below it, then I'm looking for this to provide support to come lower. So even the fact that we're drilling down into this candle, again, not what I'm interested in seeing. I wanted to see it come up, pop, and keep going. Not this. These two down candles, not interested in that kind of slop. So we're back to midpoint right here is the line in the sand. Right there. Look at that wick. Nasty wick. See the body stop right on it? Now you want to see it go higher. That'd be it, because my stop loss would be sitting, technically, if I was still in that, my stop loss would be sitting right here. Just one tick below that low. So that would have been, keep you safe. So if you see it starting to come back down here again, close it out, man. Because you've already stretched. You've already hit through the midpoint of that. It's got to get out of here. So as soon as it takes that high, I'll be moving right into break even and waiting now. So you get into a risk-free trade and let it go. Because if it doesn't take that high, then I don't trust it. So from there, that stop loss that's sitting there, I'd move that sucker right up to the bottom of that candle. Just because I don't want to see it come back down there again. Does that make sense? It's doing great. I'm almost at the end of my physical training and settlement on workers' comp case. Heard at work. Yep. I had the same thing, man. Had the same thing. And mine's an ongoing case. I've been going since 2019, and I'm still battling them. That's what insurance is for, though, man. They're always quick to take your money, but not so quick to pay you if something goes wrong. So you'd be sitting right here. If you're into that for a long, I'll be at risk-free right now. This, I do not even want to see it come back through the midpoint of that candle. That's it. That's the next line in the sand. And we're sitting on a 58 candle. Yeah, I'd be out right there. Just because I don't like all that. This whole come back and forth stuff. Nope, not interested. So now wait. Just move to the sidelines and wait. We're back to our little no-go zone again. Again, not what I'm interested in. It's not leaving the way it should. So we'll wait now. I gotta wait for it to break this high. That 50% is already run up into the premium portion of this leg that's come down here. We've just run back into the premium. That's sometimes all you need to do is just run up to 50, just tag that premium level and then send it lower. So we've got equal lows below us, and we have a 15-minute. We have a 15-minute discount box, and that sits right here. That's a 15-minute. You figure I'd learn my lesson with my coffee and I like a retest of this on a 15-minute. If we do get higher, look for this right here. That little breaker, it takes out this little swing point right here. There's a swing there. Lowest down close candle. Takes out that high. Becomes a breaker. Trade back to the breaker. And then you want to see this kind of, I'd like to see this kind of technique, or this kind of, let's see if it goes like this, where it's at right there to there. And that can vary and then come all the way back down to somewhere around there. So if we can come up, tag the bottoms, you have 1, 2, 3 levels inside that breaker. You want to see get tagged and then roll over and come down. I want to see a portion of this stay open still. And send this lower on a 15-minute chart. Right now, this little breaker down here takes out these that little swing point. Nothing else there. We're in the mean threshold of that right now. Kind of chopping through it. I want to see it pop through there. Come back, use this candle as support. Continue pushing lower. And you want to see a fair value gap form below here too. See how we're eating through this level now? We're through that level. Tag, go lower. Wait for the last one. If it drops through here, wait for the drop through, come back up and use this whole zone here as a support to go lower. And then you're targeting, if this be the case, you're targeting way down here at 324. Watch 2 seconds. It's through. Now I'm going to take a short there. This is a Model 3. You pay yourself 1 there. Move to break even. As it takes out the low, you pay yourself 1 there. So you take 1 off there. And then you move yourself to break even. So now it's a zero stress trade. You made a couple $100, whatever. And now you want to see it continue pushing lower. This is a Model 3. Now we're looking for a Model 4 continuation. And the model 4 came back one more time into our zone. So now you'd, again, if you're short here, wait for that to get taken, move to break even. So you made a small little profit, because you can have these times where you break a low and then it turns and just shoots straight back up again, right? That's the whole purpose of pay yourself at the first low, move to break even, and then you want to see it continue on the downside. That's a model 3. As soon as it breaks that, there is the extension. Then you want to see a model 4 come back, tag the bottom, the low, or the breaker, or the no-go zone if it happens to be overlapping or close. And then you want to see it take out that low one more time and then just continue to extend. That's typically what you want to see. It's good. Good morning, Hadi. I had 2 surgeries. First attempted to repair rotator. Ouch. Didn't work good enough, so did full replacement in August. Oh, wow. Good now. Tired of physiotherapy appointments. Yeah, I hear you, man. But if they're working for you, that's great. A full shoulder replacement. It's amazing what they can do with artificial parts now, hey? Amazing. And now they've got all this stem cell stuff they're doing. That's incredible. So watch right here now. This is those 2 zones I was telling you about. There's a little tiny, look, stretch it out. You'll see it right here. A low taken. You got a little sibby. Look at the 50% of this range. And we'll see how this acts here. %. I want to see how to come back down here because we've closed above this now. So now you're bullish inside here. You're looking for 50%. And we have I can hear my wife whispering there. Hang on. You close the door so I can sneak past. So not interested in this. We've got that small change in direction there. And then the continuation. So you're up over 50, 62% now. So you gotta wait. See how those little Model 3, Model 4s, you gotta make sure you pay yourself at those lows. Otherwise, if you're trying to greedily hang for lower price points and it comes back against you, you got to make sure your stop loss is way above you here. And if we see that there's a reversal here already and you didn't notice that, now you're in a risk of we've swept the low. That could be the low of the morning and we could be heading back higher, right? You have to, get better validation on your next higher time frames. But in general, if that's the turn at 9 o'clock and we start to march higher and you didn't recognize that point we just talked about, then you're going to get a full stop taken. And you could have paid yourself. Good morning, Derek. How you doing? The B Master D. So there's a nice little retrace into 62% of the range. If you did catch a long right there off of this reversal, and you paid yourself at 50%, 62%, then you got yourself taken out right there at 50, because you would have moved your stop loss from break even. You pay yourself half, take another 10% off there, and move the remainder to 50%. So it would have came back and taken you out there, and you would have been done. That's internal range of liquidity. Move to the sidelines. That's your model. Done and done. If it continues to go higher, wait for the next model. So I'd be waiting for this little high to get taken, find some support at that, and start reaching for the next highs. And continue going higher. If you want to really wait for this whole thing to break out of here, wait for a market structure shift above here. And remember, we have upside. See how there's lots of wick going on here, right? On the 15-minute chart. So we could still see a retest of this little breaker right here and come up to the low of it, the close of it, and then the mean threshold of it. So that's where this one is good. So it could be bouncing anywhere inside that little area there is all you want to see. If we do go through it, then for me, it becomes one of those support to continue pushing higher. There's one little tiny spot right in here around 466. That will be the additional support if I want to continue seeing this go higher again. But on the hourly, we've rolled over and go in lower, and we're right in the bottom of the hourly zone. So what I've been showing you on here, if this is the hourly, here's our change in direction. We've traded back into that, and now we're looking to go lower. We've taken out that low. So if that's your first entry, you got entry 1, entry 2, entry 3. You've entered into those, into at least your second one, or scaled in your second one. Your stop loss is sitting up here. And now as soon as you take that rejection block, pay yourself there, move to break even, you get a stress-free trade. Take another portion off at the lower part, or the low here, and we're into the discount box. So this is box to box trade on an hourly chart. Okay, premium to discount boxes, tagged, dusted. So the next one, you want to see it come back up into here. If it does push through here, you're looking for a retest of this BISI right here. If that BISI gets hit, tag, watch the 50% of that BISI. If it rolls over and comes back lower, that's typically what I want to see this next leg continue going lower. If it breaks through there, look for the high to get taken, and then you're waiting for this BISI to get broken again to the upside. You're already trading inside it again there. You're looking for this higher BISI. Once this one gets closed above, come back, tag it, and then we're looking for this to close it. That's what I'd be looking for on an hourly chart. So that's the same thing we look for on 1-minute charts. They just happen quicker, so you have to see them. You have to see the models unfolding. And now there's a set of rules that go with each one. And if you're new to this channel, you'll know that there's a specific rules that you have to follow for each one of the models. Morning, Russell. How's the colonies doing, Derek? Let's have a look at some of these other markets before the 7:30 Canada time hits, the 9:30 New York Open. I don't want to see, if we see it get below here, we see it drop down here, come back up inside this candle, or inside here. I want to see that continue going lower for ES. That should bring the rest of this down. Let me get rid of all this buy side stuff we got here. Those were the upside objectives we were looking for ES above these old highs. They're done. The daily hasn't given any indication it wants a reverse now. But the next, what are we at now? 26th, 27th. So the next 2 weeks, max, we should start to see a reversal happening here now. And this is another inverted market again, like last year. So we could see it more upside continuation here. Good, but the cooler weather, sub 70, has me letting them alone, so I don't know what's going on inside them right now. Anxious to get inside them. Probably one of them today, as we're getting up to 70 degrees today. Yeah, our temperature, we came back, we had snow again. It got down to -9 the other day. It's like, wow, we came back to like blowing wind. Oh man, it was super cold, super cold. We just enjoyed this nice weather over in Paris and England. Then you come back to it's blowing snow, and then next minute there's just snow covering everything. There was no, the ground was all clear, and then boom, snow hit. And now today the snow is melting again. We're back, getting back up into double digits. So that'd be nice to see us get back into 17, 20, and then start reaching for that 30 degrees that we typically look for summer. Bees are really bearish, not fond of bears. What bias do the bees have today? The bees are bearish. Yes. Anyway, let's have a look at oil. Oh, nice. Look at that. If you dip through this level here, or this, after you've had this swing, look to the candle to the left, the first bullish candle to the left, which is this guy. So your body trades above it. We look for it to come back, and we want to see the midpoint of that hold. If the midpoint gives way, you look for a retest of the SIBI below you. And look at this. We just closed below it, and what do we reach for? Tag the SIBI, and then quick snap off of that. So now I want to see that we've closed above here. I want to see oil start pushing for rejection block right here. Pay yourself there. Look for the midpoint of this candle, and then watch that to run higher. If this bull trap lets go here, then you're on a nice little run above, probably running up to that 98.48 level. So I want to see this hold. Now you don't want to see anything go below here. If it does, this is your no-go zone right here. 94.43. That's on an hourly basis. So if you look on the 1 minute or the 5 minute, 5 minute is just giving us a run back inside this range. So pull your fib tool from here to here, look for 50%. I'm looking for a retest back into here. That'll come back and fill that SIBI. And you're looking for a retest of this swing point. First candle to the left. That little guy, that guy, they're inside the bigger guy, so you use the big one. 95, and the no-go zone is, or the no-go line is right there. And I'll put it on here so you guys can see it. And we'll see if we get down into that. That's the tag and go line. If it goes through that, look for a retest in the SIBI below, right here. That's what I'm looking for in 5 minutes. So we'll see how that turns out. So much for gas and oil having crazy high prices, hey? Gas is always in the shitter for some reason. Real estate. Looking, we've now traded above the bull trap. I like that. You come back and use the midpoint of the bull trap. Look at this. This is why this works. 4 models. This is a model 4 continuation now. You see it come back, tag the mean threshold of this. If it trades through that, look for the SIBI. Look at this. The bodies do not close through the midpoint of that candle. See how they bang on it? Tag on it. You want to see that go higher now. This whole waffling around here, not what you want to see. You want to see it come back, tag it once, and then leave. That's cleaner price action. Okay? So I want to see that start pushing higher now. As soon as it takes those highs, move to break even. That's the first high you're reaching for. Pay yourself at that, and then move yourself to a break even. Not that you're trading real estate, but I'm looking for this to go higher now. S&P or the TSX. This was our prediction. We wanted to see it would either do this or it would do this. So we got this drop down a little lower than we expected. Now we're back up into this run higher. I didn't want to see it get through here actually, but the moment it closes back through there and then retests it again, right there, retests it on this candle, that's the indication to go higher. Well, that natural gas is starting to curl here, hey? Bitcoin I'll get to in a minute. This is the real estate in the States. This one does really well. It's paid me well for, it's like 8 years or something like that now. It's been consistently paying dividends all the time. So it's paid for itself and then some. So I like that stock. Gold. Not clean, too choppy right now to play in. So I'd wait on that one. Silver. Silver's right. You're in a tight little range here. Premium box, discount box has been hit now. I want to see that reach all the way back up into this premium box. So if you're looking at premium and discounts in silver, that's premium. Discount. Oh wow, that's the whole thing's in a discount. So you'd have to do this. That's what you gotta do. You gotta take this like this. When you have a premium, see, this is your discount right here. See how this whole zone here is all suspension block. It's all like just got the big chunks of opening in it. You'd have to count the whole thing from that candle's close to this candle's open. You'd have to count it all. So what you have to do is you have to take, if you want to just build a little discount box, you got to go from here to here. That's how I do it anyway. See how we've come down, tagged it? So now your premium box is sitting right there. Going to 76 in Atlanta today. Oh, nice. Got to run. See you tomorrow. See you later, Randy. Take care, buddy. HNCD. You love it? I do. I do love it. It served me well for 8 years at least now. Consistently, it pays every month. So it's a it's a dividend paying stock that never stops paying, man. It's been consistent. The dividends dropped, but now it's in such a nice little discount that you're making 10 or more % on it, right? So it's consistent for building long term. So real estate is always something. People are always looking to build more houses, and growth is inevitable, man. So I think when things open up down there in the States again, the real estate market's going to start to boom. Once you get a new president down there, they're kicking all these people out. You're not allowing immigration to happen as well, then you're probably going to end up getting a real estate market that will start to boom again. That's my fireman's opinion. No idea of fundamentals and all that other stuff that goes on. That's just my wacky opinion. Good morning, everyone. Nice to see you back. Thanks, Hans. Good to see you. I'm in ticker symbol O, which pays nice monthly dividend as well. Symbol O. Let's have a look at O. I'm looking for Mosaic, by the way, to get right down into here. And then I'm looking to buy Mosaic. If I see a buy signal down in here, I'm looking to buy Mosaic, because it doesn't pay great dividends, but the potential to make principal on this, it only has to get up $2.40 or $2.50 to make 10%. So I'm looking for a nice little tag of this discount box here on the daily, and then I'm looking for a buy signal in here, and then I'm going to take that for 10-20%, and then it pays a small little dividend of 22 cents per quarter, so it's like 3 or 5% or something. That's not a lot. Look at this. Same thing we do every day on our charts. So there's 12 of you in here. Watch this. So this is Ondis. I don't know what Ondis is. It's something, one of those ones that I think we were looking at, somebody was talking about, or I was looking at big growth ones this year. This is what you're looking for in March, the end of March. See how we have the break? This is this one thing I teach you guys every morning, is this reversal. So we're looking for the same thing on a daily or 4-hour chart. You get this change in direction. So now we've got this change in direction right here. We've traded above it. The moment we come back and tag it, so there's scale in 1, scale in 2, scale in 3, your stop loss is sitting just below that low. And we're looking for this continuation. That's a trade profit or a trade model 1. Now you could do a take profit model 1 inside here and trade up inside with 50, 62%, so on and so forth. Or you can leave it now till May. Okay, the first week of May. So you're in, you've scaled in 1, scaled in perfectly 2, and then you continue going higher. The moment, if you want to play it safe, the moment you break that high, you pay yourself. Okay, you pay yourself and move your stop loss to break even. Comes all the way back down, sends it higher. As soon as it takes that high, you can pay yourself again, move your stop loss to in profit now, and wait for that high to get taken, or rejection block. Rejection block, there's a premium box up here. So this is box to box inside this range. Inside this smaller range, this is the box. Discount, premium. If you run through the premium, I want to see that get supported and then send it higher into the next one. So let's just look at this. See how this is right here? We trade above it, come back inside it, we're all the way down into here, this whole box right here. Here, and now you want to see that go higher. We've got a change in direction right here. Body's traded below it, tagged it. Now we're inside this small range. If we close below here and take out this low, we're in a swing rejection. So I want to see this pump up one more time into the first week of May, and then that's where I dump it. So you're in at $8.56, like perfect entry, $8.56. You're in profit already anyway. You've already paid yourself. And now you're looking for the final push for the first week of May. And then you're already up 86, you're 11, almost 12 bucks already. So that's almost 50% return on your money using the principles I show you every morning on a 1-minute chart. There it is on a 4-minute. And that's 50% return just in the month of April. Anyway, always a REIT like AGNC. I want to see this. Anyway, I'm just going to consolidation. This is a CAM Model 1 entry. Okay, here's your it's not one of the Model 4s that I typically show you guys, but it is the CAM models. End of March going into April, displacement candle. As soon as we come back and retest this consolidation again right here, hits it, runs up through the premium array, takes out the high, pay yourself. That's the April wealth builder. And that's it. You know, there's 10%, 20% on your money. Well, in this case, it's 10%. This is 50%. That'd be it. You'd be done for the year. You can move all your money into the sidelines now and let it sit there and wait. And you've got your 50% return on your year, or 20% return on your year. If it's partial, you're not going to put it all in there, obviously. But if you've got the 20% per sector rule, you've hauled out 50% of that 20% already of your portfolio. Move it to the sidelines and wait for the next August run for the year, or you can catch a reversal into July, August. Sinclair, what happens in August, September? So here's August, sorry, March, April. So here's March. We're right at the bottom of March. We have this pop up above this down close candle. We want to see this get broken to the upside. It does. Breaks to the upside. Now I want to see this first candle on this little sweep. After the sweep, the first candle to the left trades above it, comes back right on it, opens on it. Here, opens on it, and then leaves. So there's $14, $17. That's a $3 run. That's 20% of your money right there. You can, if you're just aiming for your premium right there, there's your premium box. You hit it. It literally closes above it, opens, just goes boop, just comes down and tags it. That's model 2 for a run up higher. So model 2 hits your rejection block, pay yourself a rejection block, takes the high, pay yourself again, change in direction. So you would have got 20% out of Sinclair. Let's have a look at it. I want to add O in here, didn't I? It doesn't matter. We'll just throw anyone in there. We'll put O in here. O. I gather this is the one you're looking at. March. Market structure shift. We traded below it right here. Pop up inside. O is a solid D. What's its dividends? What kind of dividends does it pay? That's a nice little tag of that candle there. Been paying monthly dividends like 3 decades. You missed DAX. I'll come back to DAX in a second. So we could see then this starting to, this looks good up here at 64 bucks. That's not a big run either. They're not big swings, are they? Well, what's the dividend right there? 27 cents, so $2, 73 bucks. So it pays you 5% return. That's not bad. 5% is not that bad. More than the bank will give you. Interesting. Thanks for that, Russell. But that's 5%. And you look at AGNC, and an AGNC will give you, look at that, monthly, pays you 12 cents. So just half of that, but look at the price. It's 600% lower. You're paying 60 bucks, this paying $10. So a dollar run up in this, and it can do that quite easily, is 10%. Whereas O has to move 6 bucks to give you 10%, and it pays 5% dividend. Not that it's a bad one, if they are consistently paying every month, and this one's paying you 12 cents, that's $1.44 in a year. That means $14 would be your 10% break. So $10 is a really good, that's probably what, 13%, 14% every month getting paid out. So 40% return on your money at the end of the year is pretty good. And then you've got a better chance of getting a 10% return on principal investment as well. Anyway, that's my lame ass way of looking at things. And then you got to be disciplined enough to say, I'm getting the hell out of there. Well, let's look at DAX now. If you're staying out of it, but 20% of the sector right there, if that's in the real estate sector, and you got 20% in there, that's making you consistently 12% every year. That's good. Let's look at DAX here. So choppy as hell, man. I'm sorry, I don't have a lot of, I haven't got a lot for you. You have to wait for this to break, get a market structure shift here, and I'd start targeting a discount box down here. I'd be looking for something like this. Your premium unit is up here. There's your premium. So see where you're sitting right in the middle of them. So I got nothing in there. This is nice. I like this. A retest. Send that higher. Change in direction right here. This is your, let's just go, let me put the premium up here first. So there's your discount box. Pull your fib tool in here. And this is your take profit or your model 1 entry right here. Model 1, enter. 50% pay yourself. Move your stop loss to break even. This is the take profit model 1 in a model 1 entry. So you're hunting this internal range liquidity for this leg here. And that's all you're doing if you're using that as a specific model. You hit 50%, 62%, move to 50, take another 10% off, another 10% off, another 10% off at 75. It opens, so now you're bumping your stop loss behind here. So you're sitting right at 70%. As soon as it hits 50 or 75, you pay yourself another portion there, comes back, takes you out right there. You're done. And you would have missed that last little piece right there. And now we've had this big retracement. Change in direction right here. Body trades below it. Oops. Trades below it. Trades back inside it. Now you're short inside this range. 50, 62%, so on and so forth, all the way back. So you've traded up, change in direction, trade back down. You would have caught both directions on that, just using take or the model 1 entry on a reversal, model 1 on an entry reversal, trading internal range liquidity on this leg or this leg. You're trading all that on the way down. If you break this market structure on the downside, use it as support and look for this go, no-go zone, discount zone to get hit. If that runs through there, look for the no-go zone for this to continue coming down to this discount on the hourly. This looked good to go higher, but now that I see this, there's a change in direction there, and the continuation is quite obvious. Does that make sense to you, Ali? But that's one model that I gave you for internal range liquidity. If you're looking at this here, we see a body trade above, you come back and tag it, or you wait for a body to break here. See how the body closes right there just above it? Now you want to see it come back and tag it. If we lose the midpoint of that, what do we say it reaches for? The discount box. Look at that. Boop. Hits it and leaves. Again, that's one of the rules, so you have to follow the rule. And it's not an ICT rule, it's my rule, but it's a rule that's consistent. And if it fails, I know what to expect. So my stop loss that is sitting here would now move to here, and that would guard that in case that ran all the way through me and blew through this no-go zone. Right? So come back, tag it. Now you want to see it accelerate. Remember I said you want to see it accelerate, not waffling around in here. You want to see that take off now. And it does. It leaves. As soon as it breaks this high, pay yourself, move to break even now, and let the rest ride and use your internal range liquidity 50, 62%. So you get yourself to risk free as quick as you can, because the rule is you don't want to see it come back there. If it's not acting the way you want, then you get out. It's known as monthly dividend company. Yeah, costs more to own. AGNC's dividends has been going down over the years. Yeah, but Russell, I think it was like 13 or 16 or something like that. It's still, and you got to think it's going down relative to the price. So even though when I bought it years ago, it was paying 12%, it's paying more now than it was back then at less dividends because it's at a lower price. But the risk of increased price of the principal is huge. It's huge. So you got to think, you don't just think about dividends, think about the principal you can make on that too. When you get a good bargain, it's in a good discount zone. That's a great opportunity to think long term, my principal is going to be protected. It's nice to earn dividends, but if your principal is protected because you bought it at a lower price and it runs up $1, that's 10%. That's a 10% return on top of the dividend. So if your goal is to only make 10% off of your portfolio or your investment per investment for the year, then as soon as it makes that 10%, move out and wait for something else to happen. But if you want long-term gains, then you hold on to it. And down at that price, for me, it's a no-brainer. But that's just me. I'm not encouraging you all to invest in any one of those things at all. You invest, you take your chances your own way. But anyway, that's my logic. So there, see how we trade below it? Now this is a no-go zone. So now we've broken through it. Tag it. I want to see a range extension here now. There's the range extension. Done. Model 3. Right there. Model 3, done. Pay yourself. And now move your stop loss to break even plus the cost of the trade. You've paid yourself a portion there and leave the rest on to run now. And we're targeting this discount box down here. That's a Model 3. Model 1, internal range liquidity, target box to box trading. That's an internal range liquidity hunt, box to box. Model 2. So take profit Model 1, take profit Model 2, take profit Model 3 now is just going to be wait for the first reversal to happen. And you've paid yourself at those data points. I tell you, man, those models, they work every time. They're really good. They're solid tools. Anyway, let's get back over to our messy NASDAQ. The DAX looks like a better one to play in right now. This is pretty choppy. So now I'm looking for a new change in direction. Derek's Bees. Look at that. Look at that tag. From there to there, it literally smashed it. Right to the frickin' pip. Look at that. That was the next price leg lower. Remember, we're looking for here. I wanted to see it come up to here. It didn't. So we wanted to see if that was the next price leg lower because it kept coming down. Look at that. Right on the beezer. Now that's a price leg. Lovely, lovely. Anyway. Like and subscribe, man. Like and subscribe if you, if you like what we're doing. Listen, don't tempt me to buy AGNC. No, I'm not tempting you, Russell. I'm not, you just figure out what works for you, man. You're welcome, Ali. Listen, my goal is to live off dividends. That's exactly what you do. You go flying anywhere you want in the world, just living off of dividends. As long as your principal is not touched, you're safe. If you need a big operation or you need some money to save your ass later, at least the dividends are paying you to enjoy your life. They're keeping you fed and all that kind of stuff. So you can't go wrong with a good dividend investment. But that takes about 50K or more, or 500,000K, yeah. But once you get there, then you just want to protect that principle, right? You just want to protect it. Don't like how ES and NQ aren't really together. ES and NQ aren't together. Well, they've both taken their lows now. So ES is taking its low. NQ is taking its low with a big run. start pushing. I'm looking for right down here now, 71.77. Yes, no aligned, not good. Look at the hourly, bearishly looking. Hourly, let's look at hourly here. Yeah, you're right down into the bottom of the discount box now. Oh, Jesus, I almost knocked my coffee over again. Yeah, if we can break through here, Derek, on the hourly, you're looking for a big rundown, man. You're looking for a rundown into here. I'd like to see this hourly box to box, the Mark III, right? If we come back and tag this no-go zone, where's that? Right there, hey? That's not really a no-go zone, though. There's a little tiny one there. If we stretch it out, you'll see it sitting in there. See it right there? Little tiny fellow. No. Is it not? No, it's not. I'm hallucinating. Forget it. There's one here. No break below here yet. So we just had a little stop run. It's at 940. So this could be the 910 turn here. So yeah, Derek, I like watch here. And the first candle to the left, this guy right here. I think he wasn't biting on higher at the time. Now I'm just looking for to see if this is the change. And that's because you're high up inside this range here. You have to wait for this to break through here, get down into a discount portion if you're going to buy this for a long. And you want to target, first one is the mean threshold of that candle, rejection block, and then go higher. But so we have not broken it yet, so just wait. Just wait. If you want to wait for a clean entry, so this is discount box, premium box. That's your target up here. I want to see that continue pushing. We wanted the oil to reach. It's reached up into the premium box here. So you've had a box to box trade here to here. Nice precise internal range liquidity. Take profit model 2. Beautiful run box to box there. And that's like $94 to $96. So that's even 5% return on your money. Not to mention the if you're just trading it as a regular stock, that's a 5% return on your money just in 20 minutes. That's amazing. NQ I'm talking about. Oh, sorry, I'm missing you here. There's our premium box here. This hasn't got tagged. You're already through the premium, so wait now for a market structure shift. Needs to hold a busy. I'm talking about NQ. Wowzer, whether it was slim. Need to pull back in NQ for a long. Let's go. Watch here. And you're really up in, you're in this premium already. So I want to see this premium here. There's nothing in here on a 5-minute, nothing on a 15-minute. We have a small 1-minute change in direction right here. Our first little bull trap's already broken to the upside. We've come back down. We've retested this. Now I want to see if this premium level gets broken. If that gets broken, now we look for this whole level to provide support and start reaching for a rejection block, old high, and then look for the next premium array up here. And it's choppy right now. It's sloppy, so your decision making may be waffling on something that's not super clean. So yes, don't play what could happen. It's nice to have that as you're in the background, but that could, if it turns into fear, just trade the setup, Russell, and make sure your failsafe is like this would be the failsafe right here, right? So I don't want to see it. If it breaks this point right here on a close in the next 25 seconds, watch. And then you need to watch this enough times to get confident about it. So watch. Got no wicks. I want to see a body break this. This is now the no-go zone. That's the area it's got to find support in to continue to push for rejection. Like for the Model 3, you want to see that's come up. Now, if this gets taken before it comes back and tags, see how it closed above? Good. Now you want to see it come back and tag it. If that rejection block gets hit first, now you have to wait for the next high to get taken. Because your Model 3 is what you want to see at the tag here. Pay yourself there. So that first little data point has already been hit, right? So if that's the rejection block and that rolls over and comes back through here now, then it's trading back against you and you're trading up into a high premium. So you've already lost your first data point. You can collect money on a move to break even because that did not tag that point. So if it continues to run higher, then we wait for this to break. You come back into it and your premium, see how the premiums, they just keep getting real close. Your next data point to take money at is sitting just slightly above you. So it doesn't make for a very clean trade because you got all this chop going on in here, right? But when it's clean, man, you're going to catch something that's just sweet. And those big open gaps that are sitting in here, they get cleaned out nicely. So just be careful of that idea you have, Russell, that it could dump. You're absolutely right, it could, but that's what you prepare for. That's what your fail safe and your stop loss are for. If the data point gives way to show that it's going to dump, then see how the next point's been hit. So you've lost 2 data points and we did not get our retest. So that tells me we have not got a retest of we haven't got this one. We didn't get this one. We didn't get this one. We didn't get this at all. So, and we've hit the data point. So we would have been looking for, had this traded above on a close, like this candle closed above here and this wick came back in here, then we'd be scaling out a portion here. We'd be like, sweet, I'm going to stay a piece here. And I start aiming for those extra data points we've been talking about. You see how it's already reached for those already? So now you got to say, are we now coming back to grab these points? It's too late now. It would have been nice to grab those earlier, right? So now there's the retest of that high. So now this has to take out these equal highs, and that's the premium right there. So if your stop loss is sitting here, which would be just below here, you're way up in the premium already. Those data points have been run. So now we're looking for a model 3, 4. So we're looking for a 3 extension and then a 4 continuation. So watch this high, these 2 equal highs here. As soon as they get hit, pay yourself, break even. Again, way too high up for me to play with right now. I've missed all the fun points. And this stuff down here is untouched. It'd be nicer if it just ran through, hit it, went up higher, came back, hit it, went higher. Then I'd have more confidence to chase along here. But because these haven't been hit yet, I'm not so keen on trying to juice the last piece of the orange here. Lucas, my man, how's things? How's Vancouver? I never did get to see Ollie in London. I tried to contact him before we went, but I couldn't get a hold of him. Would have been nice to go out for beers with him, but alas, he did not get back to me. So see this? That's the thing you got to worry about, man. Untested. So Russell, kind of put this as a review, or come back in and review this later. And your instincts on this could reverse on you. See how we've come back and tagged it once, and now we're coming back into it again. So you're always keeping an eye on a potential reversal point, which is a little, small little guy right here. We close below that, and we take out the mean threshold of this candle. Then look for this guy to get retested. And then if we lose the mean threshold of that, we're finally going to get this SIBI down here retested. So your first indication is to watch right here. Watch that close in the next 5 seconds. There. See how it's closed below it? Tag it. Now come lower. Come and sit down. Right in the middle of this candle right here right now. But we've closed below here. Watch to see if this now closes back above here. If it does, then you have to wait for the shift. It's 5 seconds. 4, 3, 2, 1. It's above here now. So wait. You got to wait for this to get taken, or wait for another drop below here. So if you were short there, your stop loss comes right to the top of this now. You got to chase this down, because if it's going to keep going higher, if it tags you, then you're out of that trade. Not that you should have taken it right now anyway, but you got equal highs above you. And you'd be done. Now wait for something cleaner. This is really choppy. $10, silver bullet. Where's your silver bullet? We're 10 o'clock. Now we're waiting for a fair value gap to form. Take this low, and then look for a little retest at this little point right inside here. Stretch it out. Look right here. Remember all these ones that never got tagged? That's always the fear. If we're using that rule of trade below it, and I'll go short, and then it closed above it again, then you got to think, I've got to move to the sidelines, because now I'm looking for this to go higher. Then it trades back, and now we've cleared out this low. We're watching the next 5 seconds here now to see if this gets retested right here. We're low, we're below it now. Watch for a retest. Okay, well, it's definitely through. Now you want to see this come lower. And I'm looking for a retest on this and potentially a run back into here. So looking at 50%. We'd have to see these break to the upside for the next price leg higher if I'm thinking this is going to go higher. This is super choppy. I want clean tag and go stuff. This wick shit, not what you want to see. And once you recognize that, wait, because this is not clean. Eight seconds again. If that closes above and below, you got to wait for this. See how we're getting this little bull flag happening here? Now we've traded above it again. You're above the premium. You're still inside this from a Model 3 perspective. You've come right to the very bottom of that. And we're talking about just having it below and running higher. This chop is what drives me crazy. I hate seeing all this chop. But you're still in the premium Model 3 extension. You're looking for this to extend these highs now. This is the one. Yeah, we wanted to see it tag there and it didn't. It already ran back up through the premium and hit the high. I want to see that range extend higher. So we watch to see if this whole zone gives way now. And then again, I'm looking at that little area there. Watch for a close below. It's below. So that's got to exit. It's got to start really moving here now. This whole wicking back and forth, closing above, below. You're still inside the premium box. How's our German DAX doing? We're still looking for this discount box down here. Look for a little test up into here. 154. 154 to, it's already close below that. Look for a retest of 150 to 154. Look for range extension. And then look for a retest of this for Model 4. The Model 4 would be a continuation to start targeting this down here. What's gold up to? Oh, gold is chopping around. Look at that, just sawing away in there. Let's look at the Forex market for those of you who are doing Forex. Euro. So the fiber is, so this morning at 3 o'clock in the morning, we're 2,300 hours, 24. This is an hourly chart. So see how we displaced above this candle? So as soon as you see this swing with a SIBI sitting right here, let's just open this up so you can see how this now works. The same four principles or same four models work on every time frame, every asset class. Doesn't matter what it is, it's going to work. I'll show you. Again, here's our discount box. So those of you who are trading or see the four models, I want you to recognize there's a small little opening right here, and we have our bull trap sitting right here. If you trade right through it, I'm looking for a close above the bull trap. If it closes above the bull trap, the rule is use the bull trap and put your stop loss one tick below that low. It trades all the way back inside it. And keep in mind, remember I told you about the midpoint of this candle? Look at that right there. It sits right on the midpoint of that candle. If it doesn't close below the midpoint, this should be safe. You'd have your stop loss sitting down here all the time, but once it's closed above there, then you can use this. But if your initial one is, I want to see it come back and give me an entry here, if it closes above here, it ran above the next higher one. So you always have to take the one that's the last one it took out. So if it takes out one and continues to run through the second one, always take the second one, not the first one. Put your stop loss just below the low, send it up. Here's your premium box, discount box, premium box. You hit it. Now, here's our premium box. You trade through it and you come back into it. Now we're looking for rejection block, old high. So this is a model 3, or sorry, this would be model 4 at this point because we've already got the we already broke the high. So that's your model 3 is continuation. Model 4 is come back down, use this last up close candle and the BISI as support to continue pushing higher. So this is the model 4 continuation. So model 4 continues. As soon as it takes out the high, you pay yourself, break even. There's your continuation. And you get a few more little continuations, and then you're looking for inside the larger range. So once you've broken this range, you go to the next one and then the next one. So if you look at you pull your fib tool, you can take this high here if you want. You got continuation. You didn't get to 62%. So you got to 50%. You move to take a half your trade off. So you got here, take half your trade off at 50. You pay yourself at the next high. Your stop loss now moves to break even plus the cost of the trade. You didn't get to 62%. It came literally gap down and took you out. It took you out. So you made your money on the way up. That gap though, if your stop loss was sitting right here and that gap happened, you pay right there. So you would actually have taken whatever your stop loss was here, you would have actually taken a loss below your stop loss because that's where the price gapped down to. And it came right back into that premium box again. And then continued to break through this swing point. Trade back into it. Send it up higher. Looking at the next premium up here, you hit that premium, come back down, rejection blocks hit right there, right on the beezer. Sorry. Now you're looking for this to break and market structure for another run back down inside here. This is already into 50% of this range. So that's been filled. So you'd have to wait for this market structure to shift, come back up into this breaker, and then send it lower if you're looking for British pound to come lower. So dollar index, look for the bull trap right here and this SIBI right here. We can get above here and above the bull trap. You're looking for another retest on all this down delivery for a bull delivery. But I want to see that break to the upside first before you start looking for that hunt. Any questions so far? Anyone? Be right back. I'm just going to use a little bit. All right, so what do we got going on here? Um, no questions? Everybody's good right now? Anything about it? Anybody want me to look at anything specific? Otherwise, I'm just going to keep I'm keeping an eye on the market here, but NASDAQ's not doing much for us to play in, so I'm just going to kind of search around. Someone give me the odds on the 27,417 equal highs. Um, it's still a target, Derek, all the time you're inside this candle here. It's mean threshold. Remember, I keep telling you guys about this mean threshold. Look at it. Like, it's that's the midpoint right there. Look at how that's holding price constantly. So it's still a potential target. So I'd stay better than 50%. All the time you're above here. If we start closing below here, look for a retarget of this down here. Otherwise, I'd say you're still got a high probability of reaching those equal highs. I want to place a bet, not enter a trade. Russell's giving 4-1 odds. Remember, the bees don't like bears. I agree. The bees have an anti-bear bias. Need to hit the 1 minute fair value gap down there, then reverse to the upside. No, Hadi. You don't want to do that. Stay out of there. You want to see it if that Mind you, I guess you could wick that. I don't want to see a body breakthrough here though. Otherwise it's then this is last little no-go zone. You want to see hold price if it's going to go higher. The fact that we just keep waffling off of this candle here is not a very promising thing. But a nice little punch through there, hit a wick in there and head higher. Yeah, like it's just punching off of that. If it just give you a little pop into here, Hadi, I'd be all for that. I just don't want to see a body close below here. Otherwise it starts to turn into another bearish run again. Well, it'd be nice to see this, Hadi, if it came into here, like popped in, ran up, cleared that out, and then quickly drove down. Well, you got 2 minutes left of this 15-minute candle. So this would be a pop. Yeah, that would be a nice little pop up into, that would be too high. Oh no, that could be right into this premium array. If we run tap, hit the premium array, bounce off of that and drive straight down. So I'd like to see something like this. Let's see if we get this a D. Let's see if we get down to here, up to here. And then get down here, up here, and then send it down. That's kind of like what I'm looking for. Pop, run, watch a reversal right here. Look for one of those bissies to form in here. Use it as support. Take out this little consolidation here. Run right through it. Come back up inside it. And then drive through. Clear this out. Use this as support, the no-go zone. And that can move anywhere inside in here. We could do this. This would be nice. Something like that. Run down, take that out, create that little low below here, then run it up higher. Clear that lot out, and then wait for a reversal here. If it doesn't and it continues to go higher above here and use this as support to push higher, then we'll look for a model 3. If not, I'm looking for a model 1 over here. Model 3. Model 4. Need to hit 1 minute period down there, yes, sir. When it goes, I feel like it's going to go. Yes, yes, indeed. Now let's see if we get a little drive back up there now. There's the full fill. No, I don't want to see that go below there. Oh, I guess, yeah, I didn't see this last little guy here. Let's see if that just pops into here and fills this. You want to see that kind of stay open. And it's a 32 candle, so it's the bottom of the hour. Now I expect to see a crazy Ivan here. Crazy Ivan, come back and get you. So this little spot here, anywhere inside this zone, so we hit right in the bottom. So now I'm looking for this to start running back up higher now. I should have put my stop loss just below this. Here, give it the wiggle room. That's okay. Let's just see if this pans out now. What trade here? A little tippy tappy, and then go higher. Stop loss will sit just below here now. Booyah! Now, as soon as it takes out this first up close candle right here, it's inside the premium. There's a small little premium right here. I'm going to move to break even. The trade is pretty much paid for itself now. I want to see, it's got a breakthrough here and use this as support now. Wait for it to close above there, and it literally sat on it. So we can come right back into here now. Send it up. Boom! Oh yeah, can you feel that? Can you feel that noise, my brothers? Feel that noise. Ba-boom! Get up there. Give us that array, man. I'll take it. I will take it. There's the rejection block, by the way. Did you pay yourself there? Watch for a retest of this right here. And we'll put a little buy order in there. If it comes down and gives us a little kiss right on there, I'll go buy long right there. I'm still looking for these equal highs here. If this gives way, we're looking for this down here. Fill, market fill. Market fill, what are you up to? All right, so right now, I don't want Phil to come back anymore. I'm stopping right there. It's got me. I didn't want to see this. Once we've tagged it and it started to leave, that's it. I don't want to see it come back here again, no. Otherwise, look for down here. Or right there. I'm going to put my crosshairs on there so you're not thinking I'm making this shit up right here. Right there. Come on, right there. 36175. 36175. If you lose 36175, look for this right here. And then the next pump. Oh, look at this. This is how we're going to reverse engineer this now. Let's see if we can do this. Let's see if we can reverse engineer this. So the potential is to run all the way down into here. There's the 7.5 right there. 31.675. I didn't want you to think it was full of shit. There it is right there. It just tagged it. Now, are we reacting and going higher? Send it up from there. If we pop through there one more time, look for this. Right on the beezer. And if that is the indication, then we're looking for running out all these highs here. Stop loss. I do not want to see it come back down to that little spot there. Half that wick is all you're allowed. I'm going to put this right here. Come on. Half that wick. I want to see that hold. Start moving up higher. So watch how this is acting here now. If it pops through here, then we're going to run below the low here. So my fail safe is right, which is my stop loss, is right here now because I don't want to see this give away. So it's got to start pushing higher now. Nope. Now look for this down here. There's the beginning of the first box. Now send it. We're below that guy already. So we're between here and here right now. And we're already through the midpoint of that. So it tells me you want to go here. So I'm watching here now to see if this lets this drop down now. If we get through here, then there's one more little fella right here, which you've already tagged to go along there. This is some bullshit. That's right on the edge of that right there we talked about. See how we've already clipped it? This should go higher. Where's my... This is the little box you want to see. We'll call that the discount box. That's the discount. It's got to go up from here. Let's go. Push, push, push. I've got a long in here. And I've just gone into break even. So I got in right here. I'm sitting right there at the bottom of that candle. So it's paying for itself. And it's got to go higher here now because this candle's been broken to the upside with a wick. I want to see no more than the mean threshold of that candle come down. Right there. Nope. I'm out. We're right up inside this premium. Discount would be right here. Premium would be right here. And so at this range, and we're sitting right on top of this. We keep bouncing off of this discount box here. It's got to rip through here now. It's got to close through that candle on the upside for me to start looking for here again. This is why you call it, when you really see chopping market like this, you got to keep your stop loss tight. Demand price move from your data points. If you see these specific data points, they got to hold, right? If they're not holding, get out because you're in a choppy market. So you got to be prepared for things to turn on you pretty quick. Good luck with that, hoodie. There's not very many clean setups going on right now. But a wise move, my friend, a wise move. So here's the nice deep dip into that. Now you want to see that react and go higher. There's your discount been hit. Send it up there now. Come on, we need Phil to muck around in here and send this up. Not to play. This is where you sit in the sidelines, Russell, and wait. Take Hadi's advice here and sit on the sidelines and wait for a clean setup. And right now, the only clean setup I can see is if we get a break above this for the premium or break this on the downside. The macro is about to begin. Let's see if we get some movement here in this macro. Let's go get up there. Nice. I just want to see it close above here now. I want to see that 11 a.m. Give us the reversal up here, Hadi. Give us a nice little change up here. So this will be like this. Like this. Still inside this one. Discount, premium. We cannot seem to break through this just yet. We're sitting right in here. And this guy still holding price. $277 a reverse to the upside. This is a choppy market. I am ditching this idea. It's too choppy right now. Watching this level and this little guy down here. Tag right there. And come on down. Right to the edge of that. Right there. Keep coming. Nope. Nope. Not clean at all. Let me see if there's something else out here that's fun to play in. What's our oil up to? Did our oil get to our objective? Yes, it did. Look at that. Bang, bang, boom. We set this one earlier so you guys could see that data point and how important it is. And there you go. Tagged it. We have a change in direction. Right here. Oh, come all the way down into there, I guess. Traded above it. We come back all the way inside. You had all three scale in points. Stop loss would be sitting down here. Scale in points. You start to run back through, hit the rejection block, pay yourself at rejection block. So as soon as it hits it right here, you pay yourself. Move your stop loss to break even plus the cost of the trade. If it takes out the high, pay yourself at the high. Now we're looking for a retest of these equal highs right here. I'd like to see it come down to right there. I'll move this guy to here. Anywhere on the top of that, and let me just build another one here. There. That just comes down and tags that anywhere inside this box or the next little tap to run higher. That's what I'd like to see. So that's your model 1, full fill of a model 1. Send it higher. Now you want to see model 3, or sorry, model 4 now. We've already got an extension. So model 4 would be a continuation. So you want to see it just come back and tag here. Before you take that high, you want to see it come back down and tag here, anywhere inside those two lines. But anyway, I wanted you to see that point right there, how important that is. So for gold, I want to see if gold closes below here and then uses this as support. Before it hits this, you want to see this come back up to here. I want to see it hit here, here, midpoint. See, there's like 1, 2, 3, 4, 5, 6. There's a 7 there as well, but there's 6 points we can come back up into safely to continue going lower. So if you look at this leg, you'd want to see at least 50% of that leg and see if that 50%, if that's the actual bottom right now, there's 50% right there. That's on leg 1, 2, 3. There's 3 hit. 4 will put you right there. 5 will put you right on 62%. And 70% retracement into here will put you right on number 6. Okay, if that's the low. See how we've dropped below there? We've just tagged it. Now I want to see that push lower. I don't even want to see it come back up there now. It'd be nice to see it just drop right here into there. That would be a gold short there. But your stop loss, unfortunately, has to be way up here, which is not worth it for that as a target. But that would be a continuation here now. If it trades back through here, look for a run back up into here. So this is the no-go zone right now. So you want to see it, you can trade all the way back inside that, but you don't want to see it pop through. This is just a took that short there in gold. Stop loss is now moved to break even. I don't want to see it come back up in here now, so it's a risk-free trade. Let it run now. Let's see if we hit that objective. This is a Model 4, by the way, if you're watching. Move your stop loss down to Here, bang, done. Yeehaw! There you go. Sell side liquidity taken. Model 4, perfect hit, man. The trade brought to you by the letters O and yeah. O and yeah. So anyway, that's model 4. What else can we do today? What else can we play with? A small little victory. So when you see something that's relatively clean like that, then you can take, you have to trust those. You have to see them enough to know that they're same kind of things just happening right here in British pound. Right now, if we can do that as a shell, let's do a paper trade here. Oh, shit. I was just going to take that one right there. That's your, now you look for continuation down here. As soon as it takes that low, move your stop loss to break even. So if you're sitting right up in above this candle, the moment it takes that low right there, that's a model 4 as well we just did. Right there, pay yourself. Now move your stop loss to risk free. Model 4 dusted. Now I want to see if this continues to push lower. If it is, my target's down here now. This is for that's my downside objective. Right here. That's done. So that's the discount box has now been hit. Hello, Pablo. Good to see you. So discount box. Now I'm going to look for this premium box up here again now. 358. Here's a fill of this SIBI. Right on the money. So if it's going to roll over, it needs to hit that, roll over, and start pushing down now. Or it needs to go from here. Watch how this is acting now. I want to see this start to push up into this 358 area. And there's 57. Now, I would not want to see it start coming back into this candle here. Now, you've done your thing. Stop loss would sit right here. There's no need for it to come down here. Now, if we're going to go higher, I want to see that push. I don't want to see this reverse come back through here, because then you're looking for another run down lower. Nope. Off this mitigation block. Well, gonna move on. I'll keep my eye open on those equal highs, but nothing too good to pass up yet. Yeah, agreed. I agree, Derek. What's gold up to? Cleared out the liquidity. This is the new discount. This is 11 o'clock now. We're looking for something big at 11 o'clock. Nothing there. 11 o'clock for gold would be a nice little pop up above here. Come back into this level and then see it run for premium up here. Or at least take these equal highs again. Ever heard of PDI? What's PDI? Previous days, something or other. What's PDI stand for? Free distribution inversion. Nope, never heard of it. It's not an ICT term, that's for sure. What is that? Give me your lowdown on that there, Sam. It's pretty much an AMD model. Okay. Yeah, I never heard of it. How does your pre-distribution inversion work? So we got a 5-minute. Oh, that says the same thing. 15:5. What's happening on a 1-minute? So you want to see this bull trap here give way for this to go higher. So I'm just going to wait for this to let go here. It's good. Open above. I just want to see it tap it now and go. I don't want to see us dig all the way down into here. So this, I want to see this bull trap let go now. Let's send that up. Now come right back into this consequent encroachment here. It'd be nice. It's another tag off the top of that high. Just watch to see if this gives way now. Then I'm looking for a deeper run inside this range here, because this will be 50%. So this will be an internal range liquidity hunt. You already hit 50% there, hey? Gotta wait for a structure break, and unfortunately that's right at the 50% mark. So I could just run up here, tag this. We get a body closing up here, above here, then it'd be a lot nicer. We've got a close above here on a 5-minute now. So we've got a 1-minute change. We got a 5-minute change. So this is all looking good. I'd like to see it come back down into at least here would be great. Let's see if we can get a push up on the model there. Come on. Right there, pop. Yeah, you don't want to see it slicing through here. Let's see if we get a close through here now then. Wick does some damage. There's a little tiny imbalance down here at 5. Watch right here. We'll see where this closes in the next minute or so. Let's see if we go lower from there. So I want to see, take these lows out here now. Look right here now. $46.91. We'll see if that goes down from there. That's a full the fill of that civvy now. Full fill. So now we're looking for, you still got equal lows here. Looking for a run above this high. And then again, we're waiting for that bull trap to get taken on the upside. That's the trap if you want to go bullish and it traps you and takes you back down again. And then traps you, takes you back down again. We want to see this bull trap let go. Come back and use the bull trap as an excuse or breaker as an excuse to go higher. Same structure on silver. Yep. Well, silver's already hit that bull trap, drove through the bull trap, came back to it, which is what we're looking for in gold right here. We're looking for this to break to the upside, right? And I'm looking for gold to continue to push like silver. This is what we're looking for in gold right there. That. You break above it, you come back, tag it, or break above it, come back, tag it, run higher into the range, into the bull premium box. Then we came back down, just swept this low with a couple of ticks, and then send it higher again. So that's what we're looking for here. And there you go. Lovely. Bull trap broken. sending it up now. There's 50%. Pay yourself at 50%. Keep going, push it up. If we roll over past here, look for this and be careful of this. Now that we've broken this little high, I want to see that just keep running now. There's the tag. Take one of those for a long. Stop loss will sit just down here. So I'm just one tick below this here. The threat is if we take this out here, or run deeper into this Sibi and take me out here. I'm trying to use this breaker as support now. See, we've already run. Remember I was telling you watch this here. We've traded through it now. So now the threat is I don't want to see it come back through here. Otherwise this is just going to tag this, roll over and come low again. So now I'm just trying to work this back to my break-even point because I've already got a change in direction. So this is just trying to offload my loss now. I don't want it to trade back through me. It'll take me out. So we're going to go lower. We've got the indication that we're turning directions and we've come through the midpoint of this. So the last little tag is down here. What's silver up to right now? Silver's hit its premium, changing direction here. If we get back through this here and we close below here, then we're looking for a deeper run into here, this premium to discount. And if we lose that discount one here, market structure shift, looking for a deeper run back into this smaller SIB below you in silver. And gold is hanging right on this breaker or this mitigation block here. We have these equal lows below us. You've got a change in direction right here. You've come back up into it for a continuation on the downside. So it's just a matter of waiting to see if this pops down here now and starts digging into these levels. Or this holds, sends it back through here, and then we start getting back up on top of the little mitigation here and then start pushing higher, looking for this premium array above us. So you can see how this is providing support. It's not letting this come down lower right now, but we do have a change in direction here. So I'm waffling between this holding and going higher. You want to see it exit here with some strength, with some purpose here. And you see how it's not, it's just hanging on this thing, drilling away at that for the final pop down, because I think we're even inside that range. We're like 50%. See how we're banging off of 50% there? So that's 50% retracement. We just came back to just dipped into the discount portion, and now we're hanging right on 50% here. So still want it to go higher. And overall, the 5-minute has been tagged. I want to see that continue climbing higher. It's got to get back through here though. This tells me it wants to go higher. 15-minute would be nice to see us break this 46.98 level. And then if you can get above here on gold on a 15-minute, then we can use this bull trap as support. Right now I want to see it run up in here, close above that level, come back and use it as some support, and then start pushing higher. You're welcome, Hadith. We got nothing going on here, hey? Changing direction after taking that low. And get rid of all this over here. Let's move this guy over here. And you'll get to see this is a Model 1 right here. Model 1 is trade above, come back inside, hit it, pay yourself right there, and you're going higher. That's a nice little model 1 right here. Rejection block. Pay yourself a rejection block at 374. And then you're looking for equal highs again and back up into these premium arrays. Sounds like my wife's doing drilling. Keep pushing. Looking for that. See if this comes back down and tags this here. Karen, I am trying to understand gold silver DAX looks like the same pattern in this reversal structure. What are the targets? Gold. My target initially would be this internal range liquidity. So this is not looking good here though. This looks like it's we're stuck inside this range, this small little range right here. And this looks like it's a reversal to come lower inside this. So you're targeting here and here right now. If you lose this market structure and find support, you're looking for a model 3 for a range extension, and then a model 4 for a continuation. So right here, I'm looking for, this is finding support. So I'm stuck between that support to go higher, but you've got to see this break to the upside. You got to lose here. And all you're doing is getting wicks, but the bodies are still not broken, right? So it's bearish inside this range. So you've got BISI, little structure break inside here, downside objective, break that, use that as support to extend, and then continue. You'd have to break above this high, use it as a model 3, model 3 to close above here and extend, then model 4 to take this, its mean threshold, and go higher. So again, bearishness inside this range right now. Silver. Silver's about to do the same kind of thing as we're seeing here in gold. See how gold is, it's in that reversal situation, and now we're down into that target that we're looking for here. First target, second target here. So that's first target's been hit. Bearish inside this range. So far it's still supporting that bearishness. So now you're looking now to see if we close below here, and we'll look for a model 3 and model 4 to see if we can break all this. And here's the second target hit now. Or you could say it's one big target right there. And you're inside the bigger target. So that one's inside that one. So you want to see this break here, silver. No break below here yet. So it's still bullish. But if this lets go, then you're looking internal range liquidity. You're looking for 50% of this range, which would put you back inside this SIBI here, that whole box. So premium discount boxes. See how 50%'s just been tagged? Hit it. Just nip over it, right? Just clip over it. And then you want to see if that pushes back through here and starts pushing higher. But again, you got to break this level right here. 75.26 on a close, and then use this as a level 4 continuation and start targeting this box up here, this box right here. Lows taken, little tiny sweep, get above it, come back into it, find support, take out the bull trap, and then send it higher. DAX. Likely fraud. Hello? Fraud. Scammers. So you're above this, find support here. I'd look for a buy on that one. Just as a support on that, I'd like to see a buy. Put a stop loss just below, one tick below here, because I don't want to see more than 50% of this get taken. So I'm giving it ample room here. So there's that 50% right there. I want to see that hold price and start pushing higher. And then you're targeting right here, 25 bucks. So it's a 1-to-1 really. So if I take that high out, then I'll look for pulling my stop loss up into here. I don't want to see this guy now. See how this is kind of like a propulsion? You want to use that as a propulsion candle. Propel that price higher now. And if it's going to play silly buggers and dick around inside here, that's the mean threshold. That's my fail safe. If I see it starting to close through that, I'll close it out before it comes and takes my stop loss. That's the reason I have fail safes. And I don't even like this already. See how it's coming back in there? That's it. No, I don't want to see that come back any lower than that. No. Now you're looking for another run down into here. If that closes there, tag this, roll over. You can get your, let's see if we can get our money back on that one. I'm not even looking at this over here. I should be watching what I'm doing here. Mean threshold, see how it's holding price? I didn't want to see it dip below there, but the mean threshold's still holding it, send it higher. So you can't be freaking dicking around with your stop loss like that. But that was my fail safe. I didn't want to see it pop through there. It wicked there, body stayed on it. That's the problem when you start to overthink it. It's still perfect on the data point. I held on the data point nicely, tagged this old high here, right inside the mean threshold, still holding, still higher. So now your stop loss, if it was sitting right here, should move right into here. Because you've come back, you've tagged it, you've broken this candle's high. So that should find support now to go higher. Silver. See how it broke? We wanted to see this go higher. It came back through this level, opened below it, came back in right on the freaking, what is that right there? What's the close of that candle? 0.85. What's the open on that candle? 0.8. 0.8. So just shy of 0.5 there. Now we're down into this discount box. Premium discount. Watch, see if this closes below here, and then market structure shift, and then start targeting this imbalance here. Well, I think that's going to be it for me, you guys. I think there was a overall, I don't think I did that well in this little account. Let me see where we're sitting here. What did I do today? 10, 1,000. Oh, okay. That's pretty much break even. Then 7, 930, 1040, or 7, 940. So 10, 20, 30, $37 down. Did DAX make the move? It did. Right there. Look at that. Right on the precision. Nice. Yeah, I think that's going to be it for me today, you guys. I hope you got a chance to see some stuff there. I'm liking gold for a continuation on the downside now. Got to change in direction here in gold, trade back up inside it. We've traded through the discount. We've traded back into the no-go zone, and now we've extended the range. So this is a Model 3 here. Extend the range. Now I want to see a Model 4 continuation. Watch this low. If this low gets taken, Model 4 is entering in here, all the way back up into this level here, and I don't want to see it break through the bull trap. So this should extend through here. Where's my stop going to be? 146.31. Nice. Model 4 done. Move to break even. Looking for rejection block next. See how we just opened below it, tagged it. Now let's keep pushing. Look for a rejection block below you here. Move my stop loss right onto that. Now I want to see this keep pushing here. This would be beautiful just to see that perfect entry for a short. And not come back anymore. Oh well. I paid myself at the lows. I just got a short from here to here. That's it. I want to see if this holds here now and comes lower. Anyway, I hope you guys enjoyed yourself today. I hope you got to learn a couple of things, and price action, again, not as crystal clear as we would like, but there's definitely some model. The 4 models I show you are definitely there. You see them on all assets. I've showed you multiple assets. You can see how they run and how seasonal tendencies, like we looked at for some of these other markets turning in April, May, or March, April, was an awesome opportunity to catch yourself a stellar trade. This principle apply, those models I showed you apply on every asset class, every time frame. They work great. Just give them time, wait for you, like see them enough times and you'll see that they work. But other than that, I'm done, and I'll see you guys tomorrow. Have a great day. And as usual, I'm sending the love, my friends. Take care of each other. Be kind to each other out there. It's a pretty rough place, so be kind, and I'll see you guys tomorrow.